Hi, I'm Jeff Hirsch. I'm here at the Money Show in Dallas with John Carter. He's the president of simplertrading.com. Some interesting options strategies, some indicators. So you're looking at some pairs trades right now.
Yeah.
First of all,
Yes.
what's a pairs trade?
Jeff, it's a good question. Sometimes you think of a pairs trade as, oh, these are two stocks that I like, so I'm going to buy the pair of them, which is not quite the idea. So a pairs trade is the idea that in the same category, you're buying one that you like and then shorting the one that you don't like. So in a perfect world, one's going up and one's going down, or maybe one's going up at a greater rate than the other one because the other one's weak. But generally by doing a pairs trade, you're kind of hedging your bets and you have less overall exposure.
So the benefit of the pairs trade is a hedge of sorts.
It's a hedge.
But you're looking at something right now with two different stocks, two big things.
Right. So what I've been looking at with the FANGs, so you got
the A's.
The A's. Well, and you got so the two big stocks that I see rallying have been Apple and Microsoft.
Okay.
And then you see kind of like Facebook, Netflix, and Amazon all really doing the opposite. And look, Amazon's a great company. I love it long term, but right now it's getting sold. So a pairs trade that I like right now, where I have exposure to tech, is I'm long Apple and either buying the stock or buying call options on the stock, or whichever kind of strikes your fancy there. But I'm doing bearish bets on Amazon.
Not selling puts.
Selling put credit spreads, things like that too. Yeah, any bullish type of strategy.
Bullish strategy on Apple, and then on Amazon.
More bearish strategies on Amazon.
Now, what was the indicators that alerted you to this pairs trade going short Amazon, long Apple?
So I try to kind of keep it fairly simple. Now, like again, I buy
simpler trading.
That's we tried more complicated trading.com and it didn't seem to ring a bell. So Amazon, I love Amazon. I use it. It's not going away. But so I use something very, very simple where I'll just get like 5 key moving averages. I like the 8, 21, 34, 55, and 89.
Those are days.
They're all
8 day, 21.
Correct, and they're Fibonacci sequencing numbers, but you can use 10, 20, 50, same thing.
Okay.
So if those are all stacked on top of each other, where 8's on top of the 21, which is on top of the 34, and price is above the 21, what I look for in that moment is a compression of volatility as measured by the Bollinger Bands.
Okay.
And if at that moment in time the Bollinger Bands have compressed, which I call a squeeze.
Showing a lack of movement in the stock.
Right. And I kind of look at it as it's building up energy, and it's just ready to release that energy. So, and that's the case of Apple, and that's great. I want to be long Apple.
So the shorter moving averages are above the longer moving averages.
Right.
And the price is above the 21.
Right.
That's bullish. And then on the bear side?
So on the bear side, you kind of have the opposite where, and they may not be perfect, but what I've found is for a long trade, the setup really needs to be clean. For a short trade, it can be sloppy. It's just, It doesn't have to be as perfect. So it takes a lot of energy to move a stock higher, but all that has to happen for a stock to go down is a lack of buyers. Basically.
Bottoms are an event.
Yes, exactly.
Tops are a process.
I like it. I mean, write that down too. So for Amazon, you have the opposite, where the 8 EMA is at the bottom, and then the 21, and then the 34.
So negative or downward short-term price action.
Right. And then when you get that compression of volatility, what you're looking for in that situation is when that volatility releases to the downside.
Sounds almost like one of those descending pennant type things.
A little bit, yeah.
Cool.
So now, and at some point, I obviously don't think Amazon's going to go down forever, but in the short term, right. So in the short term,
they're pretty much running the world.
Right.
Apple as well and Microsoft. Hey, listen, John, appreciate it.
Yeah, absolutely, Jeff.
Good stuff.
Yeah.
Good pairs trade. Long Apple, short Amazon. Thanks, everybody.